Hey, Steve Saretsky here. As always, this is the Canadian real estate market update with a particular focus on Vancouver real estate. If you get any sort of value or entertainment out of these videos, all I ask is that you hit thumbs up, subscribe, appreciate the support. As always, if there's any comments or questions, put those below and we'll banter back and forth. It's really the best part about these videos and engaging with you. I think you can gain various insights and different opinions and viewpoints from those comments. So, as I mentioned in last week's video, Canada's national home sales declined in the first quarter of 2018 by 16%. So taking 2017 Q1 sales versus 2018 Q1 sales, there was a national decline in home sales by 16%. Of course, that continues the trend where we actually peaked out in 2016 and have since then have been seeing a continuous decline in home sales. Now, just to follow up with that, looking at some of the Q1 data again, looking at the average sales price. So for Q1, the average sales price nationally actually declined by 6.27%. This was the first negative price growth on a year-over-year basis for Q1. So if you take all the Q1s dating back over the last 10-15 years, this is the first time we've seen negative price growth on a year-over-year basis for Q1. Again, that was a 6.27% decline. So now if you sort of unpack that, a lot of that came from Ontario, particularly in that detached segment. I would argue, some people argue that real estate market actually peaked out last year. So that's what you're comparing it to. But I think at the end of the day, when you really put it into hindsight, the trend is obviously down in terms of sales. That's where things are going. Obviously, you throw in foreign buyers tax, and really the biggest thing here is the tightening of the mortgage taps. Everything's just getting a little bit tighter. The mortgage stress test now in full effect. That, you know, again, reducing people's borrowing capacity by 20% on average does generally not bode well for higher prices or a restart in sales growth. I think you sort of have to go through that economic housing boom, housing bust cycle. That's generally how these things work. Now, if you unpack that even further, looking at BC real estate, sales declined again in Q1 from the peak of 2016. This is a continuous trend. The sales numbers are basically around 2014 levels, so we're pretty much back to pre-housing boom volume. But despite that, the average sales price for Q1 actually increased by 8.49% year over year. So again, comparing BC real estate, the average sales price for Q1 of 2018 versus Q1 of 2017, the average sales price increased by 8.49%. And this is primarily due to that condo segment, which is still red hot. So the floor of the market is coming up. I would argue that more people, because of that mortgage stress test, are actually getting pushed down the housing ladder, so to speak, into, you know, smaller 2-bedroom and 1-bedroom condos, and that's been driving the average sales price of that floor, which is where most of the volume is coming. And so that's where you're seeing the average sales price increase, because that detached segment, particularly the higher you go, is extremely weak. As I've mentioned in previous videos, all you have to do is look at the Vancouver detached market for Q1 of 2018, which registered a 27-year low in sales, and I can tell you, here we are near the end of April, and that trend is continuing here in Vancouver. So there's lots of downwards pressure on those prices right now. But again, this really pulls it all back. You can see each various sort of province, how it's reacting. I think at the end of the day, the trend nationally, because this all comes down to credit flows, you know, investment into the Canadian economy, where we stand today. How does the Bank of Canada move forward with interest rate hikes? They paused without hiking, I believe, last week. Recent numbers show that despite there was a decline in mortgage growth and mortgage borrowing last month, personal loans secured against residential real estate actually increased in February, which is the latest round of data. This increased to, what was it, 6.83% in February. That was the highest growth on record that we've ever seen in personal loan growth from residential real estate. So basically what it is, it means people are taking out loans against their house. So this is essentially a home equity line of credit where people are borrowing against their house. So this is one of the reasons why I'm a little bit more on the bearish side of things. It's not necessarily so much against real estate or saying that it's not a good long-term investment. I still agree with that thesis. My pessimism more comes towards this ideology that, or these government policies that are basically predicated on people going further and further into debt and borrowing more and more. You can't borrow your way to prosperity. And so that's really what it comes down to, this record high household debt, personal loan growth, again, ramping up to its highest pace ever on record, which is really just people tapping into home equity, right? So as long as the house prices keep rising and rising and rising, they just keep tapping into more and more equity and then refinancing that debt over longer and longer periods of time. And that whole sort of scheme basically comes to an end as soon as house prices stop rising and people can no longer borrow, because there ultimately does become a point where people can't borrow anymore. But again, we get sort of stuck in this sort of rat race where we're borrowing more and more and more, and then the Bank of Canada is basically stuck. They can't even hike rates now. We're basically stuck in this toxically low interest rate environment where, every quarter of a point interest rate hike, which is nothing, is substantially impacting the balance sheets of Canadian households. So that's sort of where my pessimism lies in the grand scheme of things. And again, you can see with OSFI bringing that mortgage stress test, this is a really sort of curb back mortgage growth. They understand that they are later in the business cycle. A lot of the pundits out there are saying the Bank of Canada will get away with maybe one more rate hike, and I think that's it. So we ultimately don't know. Predicting, I think, where interest rates are going to go is near impossible, but obviously you can sit here and speculate. But yeah, I mean, that's pretty much this crux of it all. Obviously, again, condos remain hot. It's that floor pushing things up. I think people are getting pushed down from that mortgage stress test, but the trend in national home sales as well as in BC continue to decline. So that's where you have to look at things. Again, I think the average sales price of that bottom segment has been coming up, but personal loan growth is where it's at, and you just lucky to look like where is all this money coming from? Record high house prices, record high debt. The largest increase in dollar volume for consumer spending for the month of February, again, this is the latest data, was in car vehicles. So I think last year Canada had a record high number of new vehicle sales. The average sales price of a Canadian car is also at a record high. People are now financing vehicles over 8 years. And you can see that this is basically just people borrowing, tapping into that equity. And that's where my pessimism lies, that this is just a crazy scheme that you get into that you almost can't get out of. And I think that it ultimately hurts the long-term growth and prosperity of an economy. If you look into Dr. Lacey Hunt, if you want to look into some of his work, he's done a lot of podcast interviews, but it's Dr. Lacey Hunt. He recently put out their quarterly report, which basically shows that for each dollar of debt in an economy, it is now producing a lower and lower GDP growth per dollar of debt. Basically, it's essentially the law of diminishing returns, that the more and more debt that you go into, the less and less that dollar of debt is going to produce of GDP growth, where it essentially becomes sort of like an end game, similar to Japan, where you just can't borrow and it just becomes a negative net sum, basically. Anyways, I would encourage you to look up Dr. Lacey Hunt. That's really one of the well-respected economists, as well as an investment advisor with a hedge fund. So this guy's actually got skin in the game. He's actually out there making money as well. So anyways, encourage you to look into that. That's all I got for this week. See you soon.